Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Brainsway Limited, trading on the Nasdaq under the ticker BWAY. What does Brainsway do? Well, this gets a little complicated. They are advancing neuroscience to improve health and transform lives. They say that they are a global leader in advanced non-invasive neurostimulation treatments for mental health disorders. They say they have a proven differentiated non-invasive neurostimulation platform technology. What does this mean? Their primary product is a transcranial magnetic stimulation device, TMS. This is an established technology. How does it work? They place a magnetic coil over the scalp. A fast current is produced in the coil. Electromagnetic field is induced into the brain, and this activates neural activity. Kind of scary. However, less scary than some of the alternatives potentially, because this is a non-invasive technology, so no surgery required, no anesthesia required, well tolerated by patients. It's very quick and easy, and strong reimbursement from insurance and healthcare providers. So what are they using TMS for? Well, some of their quote-unquote massively underserved markets are in major depressive disorder and obsessive compulsive disorder, so MDD and OCD. They say that TMS is a good option for people who do not respond to any medications or psychotherapy, especially when surgery is basically invasive and experimental. However, they have a 22-page investor deck that also lists some other disorders and issues that TMS can correct, including smoking addiction, with a whole lot of smokers still out there. Do they have a moat? No. Do they have competition? Yes. However, according to the company, their technology, because this is such a new space right now that they're in, any advance in technology gives you significant barriers to entry, and they're saying their product is significantly better than the legacy products used in this space. And it also doesn't hurt that Ryan Telford has this stock in his liquid portfolio, and it is outperforming some of my best performing stocks on this channel, including Enterprise Group and NTG Clarity Networks. So this is the disclaimer from Brainsway. Please give it a read. And this is my disclaimer where I'm not a financial advisor. I'm definitely not your financial advisor. This is not financial advice. Please go do all your own research. This is simply an introduction video. So yes, this is a turnaround story. This is a 5-year chart with a significant decline in share price for about 3 years. However, recently share price has been recovering. Why? As a microcap investor, I'm typically looking for inflection points. You could see here for quite a while, expenses were significantly higher than revenue. All of a sudden in recent quarters, that has gone away. The company is becoming profitable. First quarter, net income positive. 2 quarters, net EBITDA positive. Absolutely no share dilution. I have to point that out. And revenue growth is consistent. So after several quarters, several years of inconsistency and lumpiness, this company seems to be finding consistent traction and is profitable. So the turnaround has begun, and the good news does not end there, as they have 75% gross margins in Q2 of 2024, $48 million of cash, no debt. And then all these things happening where they're testing other products, they're testing their current products, they're completing clinical trials, all this potential for future growth. And that growth is there and quite significant at a valuation that I would consider fairly reasonable for a microcap on the Nasdaq. They are just turning EBITDA and earnings net income positive, so these numbers are a bit wonky, but go take a look at valuation for yourself. They have cash, they're producing cash, they have no debt, they have a 22 million share float. What do you think? This is what I'm typically looking for. Brainsway revenues are trending up, earnings are trending up, cash is trending up. Royce is trending better, not great yet, but it's getting there. And then valuation recently in the past year is trending up. So not a snapshot in time, but looking at their historical trends and trying to predict the future of this company. They have a recent earnings call you could go listen to. see if the company can convince you to become a shareholder, because their investment pitch is pretty good, right? That's why I'm making a video on them. And this stock was not found by me, but from one of my paid members in my Patreon. So thank you very much to that person, and to continue research on Brainsway and tons of other stocks like Brainsway that could potentially make money in the stock market, please join below. The link will be in my pinned comment. As always, you've been watching Common Sense Investing. Thank you for your time.